is many one-off quarters. You know what I mean? Where it's just like half of the more. Yeah, there's a bunch of them.
Yep.
So I wouldn't read into it too much. Just look at operating cash flow. Like, again, depending on where in the investment cycle, Google it. Like, that's something that like a lot of people forget. Like, these are real businesses. Like, they have investment cycles where they see like pull forward demand in the next, I don't know, 3 years or whatever, that they need to prepare for that, right? Like, these are real businesses at the end of the day. They're going to invest how they see fit. And sometimes that muddies up the free cash flow and it doesn't look pretty. There isn't many businesses in the world that is like MasterCard that just goes up and to the right without fail, right? Like, these are real businesses.
Well, look at Joseph Carlson's portfolio.
And that's like the big reason why I'm with these companies in particular, why I'm looking more at the operating cash flow, because like temporarily, if they're putting more investment into capital expenditures, the free cash flow is going to look uglier than what the actual performance of the underlying business actually is. And it creates this illusion that they're not growing as much as they used to, when actually they're growing still at a pretty healthy clip. Yeah, I definitely think that you can't just set the ticker into Qualtrim and make your entire decision just based off of what that shows you.
Get Joseph Carlson on the Cash Flow Kings for a debate versus Aria will be the moderators. Actually, Fiscal probably doesn't like Joseph as much as I do now, so I'll be the.
I don't have any particular beef. It's just you can't just base everything off of what one kind of tool spits out at you.
Yeah.
Right. Yeah.
That's his own software that he created.
Qualtrim is like it's his thing that he sells and profits off of. So I get why he, puts that as his first, foot forward essentially in a lot of his content. But at the same time, like every single stock analysis tool has its limitations, and you have to be able to like look a little bit beneath the surface and exercise some of your own personal judgment as an individual investor, or just buy the index if you're not willing to do that.
Or buy SCHG.
Right?
Yeah.
SCHG, be like Ryan.
Yeah, I'm not buying Google though. Oh, Aria came out. Wow. No, but SCHG, it's like Google's. I'm not gonna lie, it's on a sale, but it's like if that point, it's like I own Google, Apple, Amazon, Microsoft. What? I'm turning into Joseph Carlson. Why wouldn't I just buy the index?
I don't have that problem. Yeah. I don't own Apple or Amazon is literally the only Mag 7 that I hold right now. So I could get into Google and I still wouldn't be like overly exposed to those stocks. And in my opinion, I would own the best two values in that area. So
yeah,
there you go.
I wonder what Dividend Dude is doing at college right now. He's probably drinking. We haven't heard much of him over the last 2 weeks. So I'm a little concerned for Double D's. Prayers out to him there.
Thank you for having me.
Aria cashed in his money in the bank. Thank you for coming on, Aria. Where can the people find you?
Don't. It's okay.
Don't.
go follow Davis instead.
Yeah, there.
Aria does a lot more deep analysis than I do. I just talk about ETFs on my channel. The ETFs are cool.
Don't follow him. You're gonna be better off. Don't listen to me. I lose money here. Anyways, bye guys.
Yep. See ya.
Later, Aria.
I was gonna ask Aria. Now he's gone now, but I was gonna ask. With that being said, with all everything you showed us, do we buy Google now, or do we wait for it to go down to 140, 130? Right? Like what's the screaming buy price that we buy it at, right?
So I can answer for him because I talk to Aria quite a lot. It is and has been a screaming buy price for a good amount of time now. In the 160s currently, the 150s now. Any lower, and it's just more and more of a screaming buy.
Yeah.
And the idea is you may not be catching the absolute bottom. It could go lower, right? Because September is a historically bad month, et cetera. But